Right then, take two. So, US yields look to be topping out. This M formation is a topping pattern. It's not to say that this can't continue, but it could be the start of a change of character in US yields. That would be expected to weigh on the US dollar. We've got this W formation, what we looked at this morning, harmonic reversion pattern turning up on the charts. You see that W there, easier to see on the line chart. That is bearish, closing with a doji for the day. You don't get much bearish than that. Okay, now we need to see some engulfments on the lower time frames and a change of character. Well, we've got one engulfment here pretty much. Didn't engulf, technically speaking, but the combination of this candle and that candle are engulfing three candles here, right? So that is a particularly bearish feature on the charts, playing into our dollar bearish thesis. Okay, clear off all these markings. So we had what we thought was the makings of a bearish run for today. Now we'll actually be closing up high on these things, which is a shame, but nonetheless we'll let things play out and see how they end up. But the combination of these 2 days could be a bearish factor for the rest of the week. Could be, possibility. Dollar CAD we've just looked at, no cigar, made some money, but nothing spectacular. Perhaps we are waiting for the FOMC minutes tomorrow. So we'll clear off all of these markings just to get a better picture. US oil in this regard is worth looking at. US oil was a pretty strong weight to our bearish dollar CAD thesis. So oil just tanked throughout the day. So that was holding up the progress in the Canadian dollar. So if we get a correction in that oil, which we may do, come right back into this demand area. We've got a bottoming pattern turning up, W formation. Again, you can see that clearer on the line chart. Right, so not to say this can't roll over and continue, but it is a bottoming pattern nonetheless, and plays into our thesis for short dollar CAD tomorrow. We can look to the NASDAQ. That neither gave us what we were wanting. It gave us an initial move up. I had to come out of that at break even. Up here, I went in pretty small and I was waiting to add, but there was just no sign of, I was waiting to add on a buy limit. There was no sign of deceleration in that strong correction, and it was too risky holding onto the position. So it came out at break even, and this market has continued to drop right in towards the close. On the daily chart, what does this look like? Nothing standing out. No levels have been broken really one way or the other. Bearish trend remains intact. We'll have to wait and see what comes of the FOMC. Yeah, it's even started to erode this. Well, it has eroded this support structure here. So not looking pretty at the moment, but we get this dump. If the lows hold, we pull up the 3-day cycle template. Again, for those that maybe are new or haven't come across me use this template before or see me use it and wonder what on earth it is. Essentially, it's just me mapping out the past week and this current week and each day. So we started this week on Monday, and we've got all of last week's information in terms of last week's high, this dotted line, last week's low, last month's low, the red dotted line. We've got the volume profile for each day, the points of control. We're coming into Friday's point of control and support very firmly. Last ditch effort from the bears. Perhaps we're coming down then into test last week's lows for another attempt. One, we've already had 1, 2, 3. This will be the fourth attempt at these lows. Yeah. So where does that leave us? Well, nothing really stands out to me at the moment. This is all very consolidatory stuff, typical ahead of a meeting such as like the FOMC minutes. The minutes will be reviewed to see if there are any continuated signs, continuated, if that's a word, ongoing signs that the Fed is done with its interest rate hike cycle. So they will be important ahead of September's meeting. And anything but dovish from this set of minutes could ignite a continuation to the downside in the stocks, for the bid in yields and the US dollar. But if we are leaning to the dovish side, or anything uber dovish, anything there that's really categorically dovish, more so than what we've heard prior, then that would be the fuel for a dollar sell-off and a rally in risk, such as the Australian dollar, these indices, oil, Canadian dollar, and it may even jerk dollar yen over the edge. We'll come to that in a moment. Okay, you all there, guys? We've got 8 of you in the room. How do people get on? Okay, moving to dollar yen. Dollar yen, dollar yen. Dollar yen is starting to break down, starting to show signs of deceleration, breaking structure. We had these higher lows taken out by this move here. We've got this M formation, pin bar. All of that is bearish topping pattern. We've moved back up into these shorts that were put in on the day on that move. So we're squeezing them out. Are we going to make a second peak, a lower high? If so, that's another tick in the box for our bearish profile on this chart. So we want to see, this is one peak. We want to see a lower peak, a lower high, a break below 145.11. That would be really sinking in the coffin, nailing to the coffin as a further break of structure, taking on at the same time this broader trend line support. We've already broken the near-term trend line. But now pulling that out to that pin over here, we've got this trend line here coming in as well. So for me, starting to look bearish, slow process, slow progress. Maybe this isn't going to be an event, but a procedure. But we'll just have to see how that plays out. There's no point jumping in on a whim, guessing, gambling. You need to see these various stages of this market breaking down before being convinced. And once you are convinced, you can go in and size max risk, targeting downside levels such as 143.70s on the break of 144 figure. Below there, we're all the way clean into 143.20. Any questions on dollar yen? In what way did I make your day, Alex? Glad to be of service. I'll look at US 30 for sure. Euro dollar. Euro dollar came up as we expected it would. It's come down as I expected it could. And now I want to see it continue up. Again, riding that dollar bearish thesis that I've made. Presumably, this is going to be the low of the week, at least for these couple of days. We've now got this opening range, highs and lows, Monday. We're still inside of that opening range. In fact, this was an inside day. Inside day. So looking for an explosive move on Wednesday, one way or the other. We are on the back side of that move, those bearish days, because we broke this high here. However, to be really officially in a bearish turn, we want to break this high here. This is the swing high, this is internal structure. A break of the swing high really is, again, hammering the nail into the coffin. This is a development of the accumulative stage that we're in, or potentially this is a fake out, and this is the beginnings of a redistribution phase to the downside. But my best bet at the moment is that we're heading higher. We're bottoming out of this bearish phase, potentially coming up to test last week's highs if we can break this structure. 109, where is it? 109.58. Can everyone see that okay? So what's happened there? What happened? I wanted to use magnifying glass. So here, that's better. Zooming in. Right, so this structure up here, that's the swing high, 109.59. JPY intervention is always expected, but it will usually come verbally, and that's sort of the amber light, if you like, and then they'll do it without us knowing. They'll just jump in, Ministry of Finance. But at this stage, no, because they'll be seeing they've got analysts looking at this in anticipation of a sell-off as well. If we don't get that sell-off, then you'll start hearing whispers. You'll get banks saying that the MOF are calling up their dealers, asking for prices, and that in itself starts setting off a shockwave of um, sell orders, really, and people coming out of their positions, institutions and so forth, in anticipation of physical intervention. But I think at this point, there's no urgency. So looking at US 30, we were asked to look at. Did I not give you that analysis, Alex? I thought I gave you that a little bit earlier. But again, it's all sideways stuff, really. Yeah, I did. Okay, do you need it again, or coming down to that 38.2 Fibonacci? Must have mentioned that in the analysis for you earlier. This was something we talked about at the start of the day. I said I'd like to see pullbacks come into at least the 38.2, which is why I was hesitant in anticipation of a move up. So now we've got that 38.2. I'm fully on guard and in anticipation of a bullish continuation. But in order to see that come out, we want to see a break of this trend, structure, and all the usual stages. So this could be someone asked me about fake outs and breakouts. This could be exactly what this is, pulling in higher time frame traders in anticipation of a continuation to the downside, having broken last week's lows, only to find themselves in a trap as the market comes back up and wakes its way up very quickly away from this volume, leaving you no time to rearrange your situation and taking your money and running, nailing and bailing. Well, there's nothing bullish at the moment until we get a break of structure, and we are on the front side of that move currently. But if we get up and above this here, this is on the 1 hour chart, we've got 35,204, got a cluster of 35,086 structure here. So we get back above this box that we formed, that we're penetrating to the downside. I think that's probably a fake out, but we'll have to see. No, it's very possible. We can keep this, can go lower and lower. 50% mean reversion comes in towards this W formation's left arm's high, so that could be on the cards. It's a strong move down, breaking structure, but it will depend on tomorrow's risk mood. And I certainly wouldn't be a seller at the moment. I want to see the price come back in, give me a discount, or to be a seller, I need to see confirmation that this is not a fake out, and that would take time to build up. I'll be looking at structure on the left-hand side. What lows are we breaking? So for now, we've got this level over there. We're trying to come into, which is this area here. And that area here guards a potentially very hard move down towards that 50% area.